Taiwanese index is also up around 67 points.
Bound to be a stormy session of Parliament. There are 15 sessions in all that will take place.
For end days, you can look at 19,960 or basically 20,000. That's the upside level. The exchanges, to begin with, will run a special pre-open price discovery session.
The mid-cap index is up about 70 odd points, so a flat opening.
The opportunity to borrow for the middle class, for small and medium-sized borrowers in India is still quite large.
Focused on consumer businesses and we left out commodity.
I think Jio will be a disruptor in the financial services industry.
Our vehicle finance unit came in at a very good growth of 21%.
It's been moving in a tight band of just about 0.4% at lower levels.
Post ABB Global that's gone ahead and declared its results just some time ago.
Revised consultation paper on total expense ratio is expected within a week itself.
Demerger has happened and Jio Financial has been spun out of Reliance as a separate entity.
Visuals coming out of Manipur last evening have shocked the conscience of the apex court, and that opinion was made clear by none other than the Chief Justice himself.
Look at that move. It has swiftly moved higher after a tepid opening that we saw early in the morning.
Well, what can we say? Just marching and racing towards that 20,000 mark. You're with us here on a fresh new edition of Closing Bell. That was the day so far. We are coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi.
Hi, what a spectacular session, right? The morning looked so quiet and dull, and markets have just taken off to the horses, and now 20,000 is almost there.
Nigel was talking about T-shirts. Yesterday or day before? Sonia was talking about T-shirts.
I am printing the 1 lakh. One sensex. Sonia was talking about the 20,000 but let's skip that because of the experience she had.
Absolutely. Well, let's see. It's just 35 points away, and the clock is ticking. There's 60 minutes to go. It's a matter of time, right? We got a dip, by the way. It's almost a repeat of yesterday's session, although the rally has come in earlier. Yesterday, the rally started at about 240 or so, and then the market went up like a rocket, the Nifty that is. Today, the dip was early on in the morning, especially before 10 o'clock, and actually even after 10 o'clock, once Reliance started trading, the market was down a little bit, and then it's been a steady, constant bid higher, which takes us to where we are now, which is 19,963. It's basically a combination of banks, large banks, ICICI, Kotak, HDFC, and ITC. So this is the combination which is powering today's move higher. Look at ITC, 2.5% in the green. Some milestones there in terms of market cap, etc., coming through as well. Banks index is up about 1%, the Nifty bank. Small caps and mid caps are higher. The small cap index actually is up about 0.5% or so. So nothing to really complain. It's really a good-looking screen with lots and lots of stock-specific action in the broader universe. Reema.
Hi, and there are so many engines firing for the markets, right? At the beginning of the week, it was IT. Yeah. Over the last couple of days, banks have taken off. ICICI Bank, look at State Bank of India. That's gained close to about 1.5%. And the market was going into the earnings season for the banking names with the narrative that NIMs will compress and come under pressure. But so far, what we've seen, barring a federal bank where there was margin compression, the rest of the banks haven't seen that. For Bank of Maharashtra, NIMs actually expanded. Even for IndusInd Bank, NIMs were, I think, at an 8-year high. So at least that thesis hasn't played out. And that's fueled the rally in many of the banking names. But of course, the proof of the pudding will be on Saturday when Kotak and ICICI Bank report numbers. But, today even pharma is down well. ITC is down well. Yet again, it continues to, provide that support. So a lot of the legs for the markets have been firing now.
Reema, maybe around 15, 18 years ago or so, those Fab Four for the Indian cricket team, right? You had Sachin, you had Saurav, Rahul Dravid, as well as VVS Lakshman. So one of them used to fire, and India used to do pretty well. Now, it seems that's the case out here, because you have the banks certain days that are doing well. You have IT suddenly coming out of nowhere, Reliance Industries as well as ITC. So someone or the other is firing on a day-to-day basis, and that's the reason why, in fact, the market is moving up. And just take a look at the pace at which we're moving up. My colleague almost tells us that if we can go ahead and hit that 20,000 odd mark, we would have done it in just 15 trading sessions. So that's the kind of ferocity that we've seen, this kind of an up move. For today, the Nifty Bank, well, the bears were building on that 46,000 odd mark doesn't get broken. It's got broken. Now look at the options data, and today we have weekly expiry. So that could provide an additional fillip if we get past some key levels. So you're looking at the 19,900 put, it's most likely that the lower level will not break for today. But on the upside, the 19,950 call, that's very, very active. And the premium out there is around 25 rupees, 20 to 25 rupees. So you add that to 19,950. If we can get past the 19,970, 19,975 mark and hold it there for 5-8 minutes on, then maybe in fact the 20,000 odd mark will come. So because of the positioning, that's what could give us the much needed 30-40 points that we are looking at. But let's find out, how do you trade the final hour of trade? Well, we have with us, I think Mitesh joins us back on the show. Hi Mitesh. Mitesh, day to day, in the morning we chat, in the afternoon we chat. It's just one way, right? One way up. You get an intraday dip, you participate, and we're moving towards 20,000 odd. What would your advice be?
That's right, Nigel. I think, it's been a market, which has been slow during a few hours and then suddenly picks up momentum and then again goes up and consolidates. I think that's not a bad sign. And given the fact that the banking index has kind of joined hands on the upside, getting past the earlier highs of 45,800 odd levels, I think, this momentum could extend. And let's not forget, while the Nifty IT, that's been quiet for the last couple of days, it remains in an uptrend. And I think, once it starts picking up momentum again, I think we could actually see some kind of strength getting past 20,000. So what we've done is taken some profits off and trail the stop loss again. We'll want to add more in case we get past 20,000. But for the timing, what I would recommend is trailing your stop losses now to at about levels of 19,840 on the spot and see if 20,000 can be taken out, that being the round number, a psychologically important number. And on the stock side, I have two calls on the long side. So IndusInd Bank will take with a stop at Tuesday's high of 1409 and giving a target of around 1475 to about 1480 on the upside. And Infosys has given a pullback, and I think the Nifty IT has given a mild pullback. Infosys announced numbers, but between the sector, I think TCS could be something which I would want to take a long positions in. Keep a stop below levels of 3420 and look for targets of around 3550 on the upside.
Okay, betting on Infosys. Mitesh, do stay on. We'll come back to you through the course of the day. We've got a CNBC-TV18 exclusive to share with all our viewers. But we've learned from sources that JC Flowers ARC may look to sell its entire Dish TV stake. Vivek joins in with the details. Vivek.
Well, that's right. So what we understand, from our sources, that in Dish TV, one of the largest shareholder, in fact, the single largest shareholder, that is JC Flowers ARC, the asset reconstruction company, is looking to sell its entire stake as far as the company is concerned. And we understand that, they have already initiated talks and 3 large players are interested in acquiring the complete stake that they have. Remember, they hold close to 24.19% stake in Dish TV as on March 31st, 2023. The shareholding pattern, post the quarter, June quarter, has not yet been uploaded. So at the end of March quarter, JC Flowers held almost 24.2% stake in the company. Now we understand that this particular stake sale will most likely happen, in the block deal window itself. And we've reached out to, number one, we've reached out to Dish TV, yet to receive a response. We've also reached out to JC Flowers ARC, still not received a response. But we understand that this particular deal could go through quite soon.
Okay, well, thanks very much for that, Vivek. So that's an interesting one. Keep an eye out on the index as well at just about 30-35 points away from the 20K level. Gurmeet Chadda is with us of Complete Circle Consultants. Gurmeet, great to have you with us here. Good afternoon. Congratulations from all of us, by the way, to your team. You're the PMS, I think, and it's coming along very nicely. Just talk to us a little bit about, when you go out and you're meeting a lot of people all the time, right? There is a lot of money out there which still wants to get in. That's the feedback one gets anecdotally. But what do you tell them? I mean, are index levels very high? I mean, they are at the highest. Very high is relative. And what's the kind of medium-term picture that you paint?
Thanks, Prashant. I think markets have been very kind. We've seen this so often. In few days, market makes up for underperformance of years, and that's what has happened. Last 2 years, markets have been flattish, almost 21 months, and and they just made up everything. And see the price action in small and mid cap. And the ones which are doing well are being very handsomely rewarded across market caps. So somebody like a Polycab, great set of numbers, likely to exceed their FY26 guidance. The market rewards with 30% move in just like 3 days, 4 days. Pre-result posts are up 6% today also. And you have the likes of ITC, which is up 40% this year. So I think it's, this is a market where your solid performance should be rewarded if you're entering and exceeding guidance. And unfortunately, always you get more flows when markets are high. So that's always a challenge as a portfolio manager. So we are trying to now moderate the flows. I think the rally has been very sharp. So we are trying to go a little staggered now. There are still few pockets of opportunities in the market. I think pharma is definitely one. Banks, few pockets, I still think there is value. In fact, Nigel spoke about the Fat Four. HDFC hasn't done anything in this rally, despite all the merger-related hangover now behind. And I think market would want to see the first quarter performance of the merged entity. Some of the PSU banks, there is value. We also find a lot of opportunities in niche players, the MFIs, new credit creation happening through both digital as well as, traditional NBFCs. So that pocket we like. And I think one pocket which is now showing a very secular trend, I think, is this entire housing-led capex which we are seeing. So extremely, extremely constructive. That there are places we are avoiding now. So you got to be a little more balanced now because I don't think so. The interest rate cuts have just started, and the flows have been very, very strong. So just trying to stagger it now versus lump sum, let's say a couple of months back.
All right. Gurmeet, talking about the Fab Four, it appears Rahul Dravid will have to play a good knock, right? Because HDFC has been consolidating a little bit, getting its eye in, and now it appears if that one can move up, then it will definitely help the index. Well, before we move on to talk about another stock, take a look at the markets. It appears 20,000 could come today itself, because of positioning, because of weekly related expiry. The intraday chart should come up for you. The Nifty has moved up in the last few minutes. Axis Bank has joined the party. That's up close to 100% in the last 30 minutes. ICICI Bank is building on the gains. And Bharti Airtel as well is coming back in style. That's moving towards, the 900 odd mark. So Bharti Airtel and the banking names, they're moved up. And that's the reason why, in fact, we're very, very close. Now we're within kissing distance. The highs of the day, we were above that 19,981 or thereabouts. But Gurmeet, you spoke about Polycab. Well, we had Havells' numbers that came out. It was a decent showing in the past quarter. Surabhi joins us for a quick analysis on those set of numbers. Surabhi?
Thanks so much for that. So Havells, it was a decent showing. The numbers were below expectations, but for cables and wires, the company has seen growth. Now, the overall revenues were up 14% on a year-on-year basis. The gross profit margin also saw some expansion, came in at around 30%. The EBITDA was up 11%. Margins were a tad bit lower, came in at 8.3% versus 8.5%. The expectations were that it would reach the 10% mark, and the PAT was up 19%. Now, when you look at the segmental reporting, cables, which is 30% of their revenues, there the revenues were up 24% and the margins came in at 11% versus 7%. The lighting segment, that showed some weakness, and that is similar to what Polycab also said. There is some pressure on the LED pricing, and that has played out. The revenue was down 1% and margins were lower by nearly 200 basis points. Lloyd, which is the second largest part of their revenues, there the revenues were up 20%, but the losses have expanded. So loss of 62 crores versus a loss of 56 crores. So they are probably gaining market share, but still not making profits in the Lloyd segment. And also unseasonal rain has impacted sales for the AC segment. So we'll have to watch out for some commentary on that as well. But overall, the consumer demand has been weak, and that is what the management has said in their press release. So that is also playing out as well.
Okay, Surabhi, thank you very much for that. Gurmeet, the street has been worried about, the Lloyd's acquisition, and it's not generated the kind of delta the street was anticipating. And that's one of the reasons that's been the big concern when it comes to Havells. And again, as Surabhi pointed out, this quarter, Havells has clocked in a loss. When do you think it will turn around? And do you think it will turn around? And if it will, then perhaps these levels would be a good buying opportunity if the cycle indeed turns.
It has consolidated, especially you rightly pointed out the Lloyd acquisition has been a bit of been challenging. Same has happened with some of the other players in the past. It was Voltas Beko, even some of the air cooler ones. So if you see Lloyd, the market share has improved to around 10% from 7-8%. But it's a margin which is a worry. They're still making losses there. Overall margins also have seen a bit of a dip. And contrast this to Polycab, which actually reported expansion in margins because of the cables and wires. So I think the 30% of the business is doing well, which is cables and wires. It's the lighting, the appliances, and the consumer durable business, which is still not really taking off. The total addressable market, which we call TAM, which is the Indian overall consumer appliances, electronics, is a huge market. So Havells obviously has a much diversified portfolio, but you probably need to see all 4 cylinders, which are the 4 verticals for them to fire. I would wait for some margin improvement to happen. I think that would be for me at 8% margin. Even right now, the valuations are slightly, in my view, rich. I would not call them cheap. It's not that the stock is downright cheap. So preference would still be something like, while Polycab has run up and it's become again very rich, but something like Polycab, KEI. We also like more, the time, because I think what you will see now is good volume growth, good margins now coming back with gas prices down. In fact, Kajaria pointed out almost 100 crores plus of energy savings in last 2 quarters because of gas prices. And export volumes have picked up, which means there will be lesser pressure on supply, especially the Morbi ones. They're doing very, very well across segments, especially tier 2, tier 3 towns. The demand is coming back. So we're focusing there more, maybe something more in cement, sanitary ware, I think in the next pocket, as Polycab has almost done a very good job.
You were recommending Polycab, I think, during the COVID period. So it's really done very well. Gurmeet, from there, I think was 5-6 times now from that level on. So a little unfair to ask you this question at 20,000 Nifty, but not the next Polycab. But talk about a name which you are still have a lot of comfort in, which can do well over a 2-3 year point of view, not for quick gains.
So as I said, Prashant, I think the auto is coming back after 5-6 years. We have had almost like a washout 2016, 22. So we like this space. We are actually trying to map the value chain. So I think Uno Minda has been a favorite. Again, hasn't done well, despite Bajaj, Maruti, key players doing well, despite they playing the premiumization trend well. They have 8 more capacities coming up in next 2 years, from airbags to alloy wheels to almost everything premium in the car. So that's something we like, and it's done very well for us. We're very lucky. Even on Polycab, sometimes you get lucky and you need to thank markets because you will get even Steven with some wrong calls also at some point of time. There's another one which we have started adding is Sandhar Technologies, which is one of the key vendors for TVS, HMSI. Honda has been again, Hero has been again the old one. They're into locks. They're getting into smart locks now. Cabins, metal castings. In fact, kit value for some of the best-selling models for TVS like Raider, they're almost at 35,000. Better capital allocation, we like that. We are also adding some of the, as I said, niche NBFCs which are focusing on credit creation. I'm a firm believer you will see possibly another 15-20 crore Indians getting added to the formal lending net. It wasn't the case, which are not there right now. You can call them new to credit, which is exposed to the informal lenders one. So, somebody like a Credit Access Grameen, a 5-star. With Geo Financial, I'm extremely gung-ho. I think the way there are a lot of people comparing it to Bajaj Finance, I think it's too early to do that. That could be another disruption. And a niche player like a Home First, which is more into affordable housing. So I'm very, very positive on credit creation. And I think there's a lot of, we don't give enough credit to IBC and the improvement we have made in credit underwriting across banks and NBFCs. I think that's a very, very silent trend playing out.
All right. So some ideas coming through. Gurmeet, stay with us. You mentioned Credit Access, 5-star, Home First in the financial space. Sandhar, that's something you mentioned, and Uno Minda, which I think we've spoken about in the past as well. So those are a few ideas which Gurmeet still likes. We'll take a quick commercial break here. We are back. We will also be joined by Tridip Bhattacharya of Edelweiss Amcon on the other side with his perspective. Stay with us.
Welcome back. We went to levels of 19,983, but from that level, we've slipped close to about 40, 50 points. You can see that minor downtick. Perhaps it's the weekly options expiry at play here, but there has been a little profit booking at the top. But still, very smart. We are up more than 100 points on the Nifty right now. But let's get you another, source-based information. CNBC-TV18 has learned that the market regulator SEBI is set to float a new consultation paper on the mutual fund expense ratio norms within a week. Yash is here with the details. Yash.
Well, Rima, after the last SEBI board meeting, which was on June 20th, market regulator SEBI had said that they would bring out a revised consultation paper on the total expense ratio management for the mutual fund industry. And what excited the industry the most was the statement from SEBI chairperson who said that the new consultation paper, the mutual fund industry would be quite pleased to see it. Now, the latest that we're picking up here is that this new revised consultation paper on the TER regulations for mutual fund industry is expected to be released in public domain within a week itself, as SEBI chairperson had alluded to, and the similar is what you're picking up, that this could have significant changes from the draft which was earlier released by market regulator SEBI. Now, the industry, the mutual fund industry, has sought two important things. One was calculation of TER on AMC level and not scheme level, and the second important part was to keep securities transaction tax and GST on advisory services out of total expense ratio. What remains to be seen is that in the revised consultation paper, if market regulator SEBI really obliges to this particular request from the mutual fund industry and keeps GST and STT out of TER. Also, another thing that we're picking up is that the TER rates are expected to remain around the same levels as they are currently in existence. So that will be an important and interesting one to see as the consultation paper gets released within a week's time.
Okay, all right. Thanks a lot for that, Yash. Gurmeet, wanted you to weigh in on this. Yash is bringing to us the story. I recall when initially it was announced, then we had these AMCs getting smacked, but then after that, in fact, they did bounce up post the clarification. Your view on them from here on?
Nigel, we have to see the first proposal had a significant impact, even if that was supposed to be passed on to redistribution fraternity. The impact was ranging between 15 to 18 bips. Now, that would have eroded significant profitability. And mind you, AMCs still are not very profitable. So look at, for example, HDFC, which is the second largest after SBI. The quarterly PAT is 400 crores. Like your top player makes like 1,500 crores, 2,000 crore PAT, right? So if any impact there, I think we'll have repercussions. But I know the size is increasing, which is now, so they've crossed 40 lakh crores and we're adding clients. So we'll have to wait what the revised proposal is. And apparently, SEBI is saying, I think that the impact should be very less. And the prices have also run up. I mean, HDFC AMC, for example, was sub 2,000. Already run up 25%. Some of the other NBFCs like Nippon, etc. have done well. I think the safer way to play this space is more like a depository and others, where it is more structural. So while the demat volumes did come off a bit in 22-23 after stellar growth post-COVID, it was offset by higher annuity charges. So you have two kinds of revenue. One is market and transaction linked, which is function of, the number of IPOs, transactions done, KYC fetch, etc., which is transaction done. Second is your annuity charges, which is e-voting, CAS, annual issuer charges, which is more, granular, recurring, right? And I think that ratio is going up as the volumes go up and eventually become a bigger mix. And then there is this insurance opportunity, which can add potentially 10-12% to the revenue. So I think with NSDL listing also coming, you'll probably have two players. I think that's a better asset-light model, great ROIs, cash conversion at 80-90%. I think that's a better way to play. Even a stock exchange, I mean, BSE has run up, NSE has and when it does. That's a better way to play this vis-a-vis AMCs, others where there can be frequent regulatory intervention on pricing.
Okay. Gurmeet, it's a pleasure as always. Thank you very much for joining us, and good hearing your views here on CNBC-TV18 as always. Thank you. ABB India is a big mover actually today. It's under pressure. ABB Global declared their second quarter results, and there is some anxiety about what that means for the local business here. This is largely about the order inflow. Vivek is here with more details to explain. Vivek.
Well, that's right. At the start of the trading session, ABB Global actually went ahead and declared its Q2 calendar year 2023 results. And within that, we are looking at the India read across and what exactly is causing the share price fall today. So number one, what they've said is that India's order inflow growth stood at 7% in the second quarter of the calendar year 2023, and this is from the investor presentation that ABB Global has uploaded onto their website. Now, one thing to note is that ABB Global has actually both listed as well as unlisted businesses in India. So the actual ABB India order inflow could be slightly softer than the 7% number that has actually come in the investor PPT. Now, however, what ABB Global has said is that the India growth is actually a shining light given the fact that there has been demand decline in China and India actually has seen significant strength as far as ordering activity is concerned. Orders in Asia, Middle East and Africa declined by 3% against the 7% growth that we're seeing in India. Now, apart from that, what we are looking at is that number one, India ordering activity is coming off a very, very high base, and also going into this particular earnings season, the previews of Macquarie actually expected a flat growth as far as the ordering activity was concerned. Against that backdrop, this particular number is not too bad, but despite that, the slowing pace of the order inflow growth is something that at this point of time is spooking these companies that trade at very lofty valuations.
Okay, thank you very much for that. Tridib Bhattacharya, the Chief Investment Officer, Equities at Edelweiss AMC, is with us on the show now. Tridib, ABB is a stock I believe you look at, and is it a part of your portfolio?
Good afternoon. Well, yes, as per the fact sheets, it is one of our portfolio holdings, so I can't get stock specific.
But it's a 7% order inflow growth from India. Is it such a disappointment? The stock has fallen, it's corrected 7%. What have you made of the reaction?
So I think overall, if you look at capital goods as a sector, I think we continue to remain positive on the private sector capex theme. But what one has to calibrate this theme against is that against a very low base which happened last year or year before, last year saw a significant growth. So on that higher base, the growth rates will moderate. But what is interesting to note is that in the context of a global slowdown, the relative pickup in India is still strong. And at the same time, which is not being talked about, and we will see as these companies report, the operating leverage on the back of higher top line, on the back of close to double-digit growth and there or thereabouts, could be kind of something to look out for. But having said all of this, I think it's basically the headline disappointment of the number coming down, which is probably impacting share prices of some of these names locally. I think the market will probably find semblance in a day or two and move on to understand that fundamentals still continue to be fairly robust.
Hi, Tridib. Good afternoon. What about IT? Are you surprised by this sort of a move that you're seeing? I mean, in select funds, you have IT, persistent systems and the likes. They are in the top 2 or 3 holdings as well. So what's your view about mid-cap IT from year on? Are we just seeing a relief rally, or do you think that it's going to be sustained from year on?
Great question. I would say that, overall, if you look at in a fair value market, where are the pockets of value? I think there are 2 pockets of value where valuations are still on the lower side. One is financials. Second is IT services. IT services, maybe in absolute terms, not so much, but relative to its own history, it is certainly lower than what it has been in the last couple of years. Hence, what we saw in this result season is on the back of last result season where we had a shocker from one of the leading companies, the results so far have not been worse than expected. They haven't sort of, shot the lights out, but they haven't kind of, disappointed massively. It's been broadly in the narrow range. I think that's what the relief rally that you were saying that we have seen so far. It is, I think, a sign that things are not getting worse. Are things getting materially better? Probably not in the next 2 or 3 quarters. So in the context of our portfolio positioning then, we were massively underweight about 300 basis points or so about a year or so ago. We are now standing neutral. I think as we speak, that probably is in sync with in tandem with where fundamentals are. So we have benefited from some of the relief rally that have come through. Obviously, in retrospect, we would want to own more, but I think we are just about right at the right places.
Just put up Polycab, if you will, 8%, almost 9% now. And this is after the reaction on the day of the result, which was, I think, day before yesterday. the results, the 1 day later reaction, which was yesterday. Yesterday was itself, I think, about a 5-6% move. And on top of that, we got a huge move on the stock. You know, I saw price targets in the region of 5,000, 5,100 from a few brokerages. Look at Havells, on the other hand, which just reported numbers a couple hours back. That has taken a dip in the last hour or so. It's down 1.5%. And it's a big candle. I mean, I think it did surge to about 1450 kind of levels at the day's high, and then has corrected quite a bit. So, Sudeep, do you happen to own any of them? I mean, if you own Polycab, I mean, as they say, you need one name, right? And it's been one of those movers. Go on, sorry.
Yeah, no, absolutely. I think it's a good spot. The difference between Polycab and Havells is that Polycab, again, I can't get stock specific here, but there are stocks which have two components. One is the cable and wires, and the other is the consumers part of the spectrum. I think overall, stocks exposed to the consumer part of the spectrum have continued to remain, reflect weak demand, whereas the companies exposed to the cable and wires, which goes into industrial part, that has seen buoyancy in demand. And it's that part of those companies which have reported recently, which has led to share price reaction. We happen to own, it's one of them, which hasn't reported yet, but we'll see how that reports. But that should benefit from the similar cables and wire trends overall. But I think, yes, to answer your question, we have caught on to that trend, not in the form of the names that you mentioned, some other name, but it's an industry name nevertheless.
What about pharmaceutical, right? That's also a pocket where valuations have not run ahead, like the rest of the market, similar to, say, IT, for instance. Is this something which interests you? And if yes, which part of pharma?
Yeah. So I think overall, the difference between pharma and IT is relatively homogeneous as a sector as opposed to pharma, which is a mix of various different businesses, which is basically local business, US business, CDMA, and those drivers are the drivers are different across different businesses overall. CRAMS and whatnot. So the point to elaborate here is that within pharma, we have gone for a more stock-specific approach rather than a sectoral view. And I think the pockets of growth are the API companies who would kind of stand to see benefit from falling raw material prices, and also select stocks where kind of overall the US demand or US pricing is kind of bottoming out, shall we say, or is seeing a bit of a respite. So I think a mix of these two is what we are looking for in the pharma stocks that we own. And as you can figure out, it's more bottom up than a sectoral approach. Overall, we'll probably be neutral or maybe marginally underweight pharma at the moment.
All right, so Trideep, final question before we let you go. What about cement? You have a couple of large names in there. You're holding the big boy Ultratech Cement as well, and that's done pretty well. Now, today we'll have Dalmia Bharat. Tomorrow as well, we'll have Ultratech Cement. So in the next few days, we'll be having quite a few cement names that will be reacting. How are you all positioned out there, sticking to the large cap names, or are some of these mid cap names now giving an opportunity?
Yeah, so I think we own across spectrum, across several strategies that we run based on the mandate. But I think in general, we are overweight cement. We are positive on the fact that infrastructure over the next couple of years would do well as a theme, particularly heading into election year. You could see some benefits which will come through, but we are not banging our back on the current quarter numbers that we kind of put out this way. This is probably be one of those years to reflect, or one of those quarters which will reflect sluggish demand overall. I think what incrementally remains to be seen as we get out of this rainy season as to how the prices hold up. And the channel checks there seem to suggest more generally that prices have generally held up better, and the costs have turned out to be kind of lower than anticipated. So that's the running hypothesis, and we hope to see that flow through over the next few quarters, not to get into this quarter results per se.
All right, we'll leave it there, Trideep. Thank you very much for your time. It's always a pleasure having you with us here on CNBC-TV18. Thanks indeed. We'll take a very quick commercial break here. As always, we get you a check on what's happening in dealing rooms in our segment, D Street Chatter. Nimesh gets you that intel, our buy today, sell tomorrow calls with our technical experts lined up. After that, stay tuned.
Making a charge for it yet again. The Nifty at around 19,985 approximately. We are only 15 points away from that level. And we've got 22 minutes. So let's see whether or not we can get there today. For the time being, let's go to Nimesh. Nimesh, what's the buzz in D Street Chatter today?
Hi Nigel, this is a classic melt-up rally. We spoke about it in the last many days, and today is again another day where the large caps are leading the rally. And also, even if you look at from a sentiment point of view or from a positioning point of view, a lot of the investors in the last many weeks have actually booked profits and are sitting on the sidelines. So actually, now it's a bit of left out feeling as well for many investors. Again a day when there is a very strong buy flow. That's the overall indication from a flow perspective. And today the buy flows are largely into the private banks. So the Nifty bank is up 1%, but that's largely led by some of the private banks which have relatively underperformed of late. So Kotak Bank is buzzing in trade today. So is ICICI Bank and Axis Bank as well. So that's one leg which was not participating in the upside, and now that has also started doing a catch up a bit. The other sector which has done well today is the pharma names, so a bit of sector churn as well. But broadly, looks like this is a classic melt-up rally backed by FI buying, and now the laggards within the financials also have started participating.
I remember, Nimesh, a headline a couple of days back in the papers, how so many mutual funds have increased their cash holding, with the kind of rally that we've seen in the last couple of days. So I guess now they're feeling that FOMO as well, because markets have moved up just 500 points in a matter of days. But what about stocks? What have you picked up?
So in terms of individual names, Rima, the first stock on my list is Credit Access Grameen. The stock has been in a very narrow range of late, consolidating as well. But now the indication is maybe you'll see a very large block in that company again very soon. Remember, only recently the promoter sold 5% stake by a block deal. So that's the first stock. The second stock is Adani Ports. It's come into my title is largely because after a very long time, some bit of institutional activity seems to be back on that stock. The FI flows are quite strong today is what I understand. So the delivery volumes are going to be quite high in Adani Ports today. So that's the second one. The third stock is Kotak Mahindra Bank. I spoke about broadly, money coming back into the financial names. Within that, Kotak Bank stands out largely because there is a very strong buy flow indicated from some large FIs. So looks like some bit of buying traction is back in Kotak Mahindra Bank as well. And the last stock is PB Fintech. Again, this is one stock been doing good of late. Again, in today's trade, big volumes as well. The stock is up 4%. Strong flows. But also there was a Citi note in the morning. They've opened a 90-day positive catalyst watch out of the earnings season. So even that seems to be in the play a strong earning possibility, and there are buy flows as well in PB Fintech today.
Okay, thank you very much for that. Guys, the countdown has begun. 11 points to go, almost 10 points as well. 10.5 points away for the Nifty to hit that milestone level of 20,000. Let's quickly get in a few calls. Mitesh is back with us. Mitesh, any BTST calls, or it's just buy and don't sell?
I think that would have worked better, but from a trading point of view, it's always good to keep working out on your options. So in that sense, I have a BTST call on Kotak Bank. I think that's done extremely well. So Kotak Bank is a BTST, and here I would recommend stop at about levels of 1949 for targets of 1980 or so. And that's for tomorrow. And JSW Steel is a BTST with the stop at 792 for targets of 712.
Okay, all right. Amitesh, thanks very much for that. But stay with us. We'll come back for more. Let's look at some earnings expectations as well. Lever will report numbers post-markets today. Mangalam is here with the key expectations we're watching out for. Mangalam, over to you.
Well, it seems like the countdown to 20,000 is a lot more exciting than the countdown to Lever's results right now, but the mod meeting is currently underway. A bunch of things that you need to watch out for. Just, as far as the revenues are concerned, mostly will be led by volume. So 5 to 6% volume growth is what the street is anticipating this time around. Importantly, raw material prices have declined. So maybe about 180 to 200 basis points in terms of gross margin expansion. Will be interesting to see how much of that is plowed back into advertising and spurring demand itself. Management commentary this time around more crucial than ever before, also because of the first time that we will have Rohit Java speak about the company's strategies going forward. Put all these things in numbers, we have an 8.5% revenue growth that the street is working with, 15,450 crores on the top line. The EBITDA grows a shade higher. We expect a 12.5% jump there, which would imply a margin expansion of nearly 100 basis points. And the EPS for Hindustan Unilever in the first quarter expected to grow by 14.5%. The question is, where does it go from now? Because the stock virtually close to its record high, and at the same time trading at 57, 58 times one-year forward earnings.
Okay, thank you very much for that. Sudeep Bandyopadhyay, the Group Chairman at IndiTrade Capital, is with us now. Sudeep, ITC has clearly stolen a march over HUL, but do you think under Rohit Java, things could be different and HUL plays that catch up or even a market leadership kind of role?
Well, Rima, I think these two are different companies. If you look at ITC, I think predominantly even now the tobacco plays a huge role in their profits. 70 to 80% of the profits do come from tobacco still. FMCG business of ITC has definitely turned around and they have started doing well. But if you look at the margin profile of ITC FMCG vis-a-vis HUL FMCG, the difference becomes very, very clear. There's a huge difference between the margin profile of the two companies. In case of ITC, all the cylinders have been working. The hotels business has been working in a fantastic way. We know the hotel business overall world over is doing good. Fortunately, the paperboards industry also is doing well, and FMCG has kind of done well. In tobacco, we haven't seen any excise duty change, any duty change for many years now, and that does help the existing, the biggest player in the industry. So obviously, ITC is on a good wicket. On top of that, there is this corporate restructuring, which there are lots of rumors, lots of discussions. Management has come and made some statements at different points of time. But what we understand is that some restructuring as far as the hotel business is concerned is going to happen. And that's also a value unlocking opportunity. So all this is driving ITC. As far as HUL is concerned, I think the opportunity is in rural consumption picking up. And that's the reason why, as Mangalam said, I also believe the commentary on demand will be extremely important. We'll carefully watch the volume growth, which they're talking about, because that does indicate what's happening as far as the demand is concerned.
Okay. Well, by the way, just FYI, Polycab is at 10%. The 10% circuit freeze. So
Prashant, a few years ago, I used to track the Nifty changes, and Havells had a very, very good chance, of getting in. But somehow the other always missed by a few 100 crores actually. A lot of times. Polycab, now it's inching up. I don't know whether in the next few years, say in the next 4-5 years or so, this could possibly be a stock with the way it's moving, the way the business is evolving, which finally one of these companies makes its way into the Nifty. Havells came very, very close, but it missed out. Still, the gap between the two on a free float is quite large. So if this outperformance continues, that'll be interesting to see whether Polycab,
I think, will not be that much.
The
now,
free
right?
float.
The free float. But the overall market, I think Havells would be about 50-60,000 crores.
Yeah.
Maybe more. And
Polycab is about 71,000 crores now.
It must have exceeded then.
And Havells is currently at 85,000.
So just there. I mean, a little higher. But
so Havells is at 85. Polycab is at 71. Wow.
No,
so there's still that 20% gap.
Yeah, so for the Nifty inclusion, actually, we'll have to look at it in terms of the free float. So currently, Havells is at around 33,000. And Polycab is just 22,000 crores also. So there's a good 10,000 crores in the middle of them. But the point that I wanted to make was that, Havells came very, very close. And then it was an underperformer. So Polycab, the way business is shaping up and the numbers that they're promising, they're talking about 20,000 crores or
FY26.
In FY26.
Maybe even earlier is what they said, right?
Yeah,
I mean, the new
that's
thing
what
was
they hinted.
quite something. By the way, for Havells, that Lloyd's acquisition, I think that was the one which really broke that momentum for them. So a few missteps there. And of course, in the FMEG business, where Havells is a big player as compared to Polycab. Polycab, of course, 90% is still cables and wires. Intense competition, lots of competition. And even Polycab, by the way, is not doing very well in the FMCG line. But cable and wires, just wondering it is a commodity business at the end of the day, right? I mean, and copper prices are well behaved for now. But that's the only risk that I see. I mean, demand, etc., perhaps will remain strong. But copper prices, I think one will have to be mindful of. But for now, it's frozen at the daily 10%, not the daily 10% limit, but it is a daily 10% limit because it's not part of the F&O. So that's Polycab for you. We'll take a very quick break here. We're back. More on markets on the other side. There's 12 minutes to go for the market close.
Welcome back. Two mid-caps, put it on your radar. One of them is Zensar, came out with numbers. The key to note over here is the margin expansion. Margins in the September quarter were just 8.5%. They've been expanding and now they've come to nearly 19%. So from 8.5%, we're talking about 18.5%, 19% margins. Deal wins largely steady. But look at the way the stock has recovered from the day's low. The other one is South Indian Bank. Just came out with numbers a while back. And the stock has nosedived. It's currently down close to about 6.5%. So we'll try and get you more color. The asset quality has been stable on a sequential basis, but the street is clearly disappointed with South Indian Bank's numbers. So two divergent moves over there. The one we'll be tracking closely at 4 p.m. will be Infosys. Now, we're working with a constant currency revenue growth of about 0.7% for Infosys, which will be better than what peers have reported. So that's on the top line. It's not great, but at least after the howler that they had in the prior quarter, there is going to be recovery. Secondly, on margins. Margins are likely to be stable at close to about 21%. The key to track will be their FY24 guidance. Now, currently, the guidance is that the company will do a 4 to 7% top line growth. The street believes that, well, 7% looks pretty unachievable. So maybe they will bring down the upper end of the guidance and say the guidance is going to be 4 to 6%. Margin guidance likely to remain unchanged. In terms of commentary for individual verticals, because last quarter the company saw projects getting cancelled, projects getting deferred across verticals, not just in BFSI, but in retail, in telecom, in high tech. What is the company talking about recovery? The second thing to track will be the spate of exits that we've seen in the company. A lot of senior management has been leaving over the last 1 year. So what's the company doing about it? Thirdly, the mega deal win. In fact, just earlier this week, there was this $2 billion deal. And if the company needs these mega deals to achieve their guidance, at least the top end of the guidance, and finally on wage hikes, because the company didn't give a wage hike in the April quarter. But the stock, barring the move that we've seen today, has actually done pretty well ever since TCS, HCL and Wipro came out with their numbers, and the stock has rallied close to about 7 to 8%. When it comes to mid-cap IT, so Zensar we just spoke about, reported numbers, but there are 3 other mid-cap IT reporting numbers: Mphasis, Persistent and Coforge. Now, if you look at the performance of these over the last 1 year, you would see that Mphasis has been an underperformer, while Persistent and Coforge have been outperformers. This quarter, we're expecting good numbers from Persistent and Coforge, though Mphasis is likely to report a revenue decline. The reason why Mphasis revenues have been struggling, because more than 50% of their revenues comes in from the banking and financial vertical. The mortgage piece of it has been hit by higher interest rates. The non-mortgage piece of the banking sector, the vertical revenues, have been hit due to the banking crisis, the regional banking crisis in the United States. So consequently, revenues have declined over the last 2 quarters, and it could even in the current quarter. The question now for Mphasis is about the recovery. Persistent and Coforge are both companies which are doing very, very well. Their growth rates have been solid. In fact, Persistent told us last time that even with the macro uncertainty, their endeavor is to hit 3 to 5% quarterly growth rates. And for Coforge, do they hold on to that 13 to 16% top line growth? That's something that the street will be tracking. So it's going to be a big day in terms of mid-cap IT as well. Sudeep is still with us. Sudeep, any thoughts on, in the mid-cap IT, pack, Zensar? Zensar went through a lot of issues. There were management changes. And the stock really struggled in terms of financials. But now it looks like it's on a comeback trail. Numbers have been picking up. The deal wins have been strong. So from a challenger, it's trying to become a champion. Any thoughts on Zensar? Have you been tracking the company's performance?
No, Rima, you're absolutely right. I think the problem was with, the margin profile of Zensar. Few IT companies are there which always had this challenge. They were, at a low-end kind of work, and the margin was not at all, as per the likings of the investors or the market. They have been working hard on it. The management team has been strengthened, and the way the margin has expanded is really commendable. And at this stage, I think it is one of the stocks which we need to continue watching for some more time. I don't think I will rush to recommend a buy yet, because there are lots of challenges still in the technology space, and we'll wait and watch. But we have to say that the performance has significantly improved. If I have to look at the entire IT pack, and in the mid-cap IT, I think the reality is US is not getting into a recession, and there is going to be a soft landing. At least the figures and facts today indicate that. And if that is the case, then there is a strong logic for IT coming back in a way, I won't say in a big way, but definitely coming back. By the time we are into third quarter and fourth quarter in India, I think we will see things changing completely. So under the circumstances, let's say an emphasis which gets 50% plus income from BFSI vertical, which was down and out, we hope that there will be recoveries. And if we see significant correction in a stock like Emphasis anytime in the near future post results, I think it will be an opportunity to buy.
Okay, we'll leave it there. By the way, do you track any other dairy companies, Sudeep? You looked at it. All of them are buzzing today. Dodla, there is... yeah, go on, sorry.
Yeah, Hudson, I think you guys were interviewing the management there and seemed very confident. So, and we've seen what has happened to the milk prices, how they shot up and things like that, and then things came under control. Overall, I think, this sector is doing well. Consumption, by and large, as far as dairy products are concerned, is stable. And assuming we have a rural economy revival, monsoon behaves, I think we should continue to see robust growth in this segment.
Okay, there's that's Hudson. We spoke with them today, but there's Parag Milk, which is up sharply. Dodla Dairy is up sharply as well. We'll leave it there. Thank you very much for joining us, Sudeep. Appreciate your time here on CNBC-TV18. I mean, so we'll have to wait, I guess, for a gap up tomorrow morning on the Nifty for the 20,000 mark. But it's just like, I guess, an overnight session. The high today was made at 19,991.85. So just 8 points away. And you would have been at 20,000, 136 point higher. There was only a brief period of hesitation at the open for the first 1 hour, 1.5 hours after open. And then it was just a clean, smooth move into the green and to the high point of the day. Nifty Bank ends about 1% higher. Nothing incrementally in the last 1 hour of trade. Actually, we had more on the Bank Nifty when we started the 2:30 session. Mid-cap index ends 0.25% higher. And I think we've got a small-cap index, which is up about 1/3% as well. Yes.
Well, it appeared like the mid-cap index was underperforming today, right? Because it ended high with a gain only for around 0.2%. So let's pull up a few losers first. ABB India was under pressure, was down 6%. Amara Raja was down close to 5%. Shree Cement was down close to around 2.5%. That IT survey doesn't seem to be leaving them. JK Cement as well was a little bit low, and KPIT Technologies, well, that stock got hit. But let's only talk about the big winners. Polycab up 10%, follow through buying out there. Newgen, big move is what we saw out there. Second day running the stock higher. Dodla Dairy locked in 20%. Or you had KCP Sugar as well, that was up close to around 15%. And you had a couple of other names like Jupiter Wagons as well. So there were select names that continue to move up. And the good news is that good numbers are getting rewarded. Newgen, Polycab, Hudson Agro, all of them did very, very well.
By the way, there's a big miss in Coforge's margins this time. Margins have come down quarter on quarter by 500 basis points. The street was anticipating a decline in the margins due to wage hike, but the typical decline due to increments is about 200 basis points. 500 basis points will need some sort of an explanation. So I think, that EBIT number at 10.4% is a big miss. And that's the reason why even the profit number has come in lower than street expectations. The question is, do they hold on to their top line guidance of 13 to 17%?
It'll be interesting to see Rima Coforge's numbers and the reaction tomorrow, because the Nasdaq could be under some pressure, given that Netflix Tesla, both of them.
Tesla also in after hours was under pressure.
Was down 4% down. So the Nasdaq could be a little bit under the weather. And Coforge, as you were mentioning, it was a bit of a miss out there. So we'll have to see how it goes. But a few companies, they delivered a miss, Rima, from the IT space. But the reaction is what we saw. Intraday, they got bought into. So let's see whether there is some valid enough clarification that comes in.
Okay, but other than that, this has been a solid session. We're still waiting for that 20,000 mark on the Nifty, so keeping us on our toes. But, 136 points higher on the Nifty, nearly 500 points on the sensex. It's been a sensational trading session. It's a wrap and closing bell. Thank you very much for watching. Our Thursday special Big Deal comes up next.